Hello students, in this session we will be discussing about preparation of balance sheet, illustration number 5. So here, as you can see in this illustration of Sunshine Company Limited, we have the ledger balances which has been given, and they are asking us to prepare a balance sheet as per the Schedule 3 of Companies Act. Equity share capital comes under shareholders fund. Then we have general reserves here, general reserves of 30,000, and we also have a profit and loss account credit balance. Okay, so credit balance has to be added. Okay, debit balance should be deducted and credit balance should be added to the reserves, and that amount will appear under reserves and surplus. Then we have 12% debentures. These are the long term borrowings. Land and buildings we have, it is a fixed tangible asset. Goodwill is a fixed intangible asset. Bank overdraft is a short term borrowing. Proposed dividend is a short term provision which we have made. Prepaid insurance is a other current asset. Mutual fund is an investment, and interest payable is a other current liability. Next, we'll move on to advance given to the employees. It is a short-term provision made. Advance given to the employees is a short-term advance which comes under the asset side of the balance sheet. Then discount on issue of debentures which is unwritten off should be shown under other non-current assets, like all these items where you pay for advertisement of for the unwritten off shares, underwriting commission, preliminary expenses, brokerage on issue of shares. Likewise, discount on issue of debentures should also be shown under other non-current assets. Tools and equipments are also our fixed assets, fixed tangible assets. So this has to be added together with land and building. Gratuity fund. So any fund which we maintain is a long-term provision which comes under equity side of the balance sheet. Then we have debtors. Debtors should be shown under trade receivables. Cash at bank should be shown under cash and cash equivalents. Stores and spares. Stores and spares are our inventories. Profit and loss account credit balance we have already adjusted. We have added with our reserves. Then we have bills receivable. Bills receivables are what? They are trade receivables. So here debtors and bills receivable should be added and shown under trade receivables. Then we have sundry creditors. Creditors appear under trade payable. Now let us look at the workings. So under workings, like I already told you, see, P&L account credit balance is added with the general reserve, and the total amount of 51,490 rupees should be shown under reserves and surplus. Then we have land and building and tools and equipments. These are the tangible fixed assets. Under trade receivables, like I told you, we have sundry debtors and bills receivable. This has to be added, and the balance should be shown under the subheading of trade receivables. So this is how our balance sheet of the equity and liability side will appear. Okay, all the items which we have discussed and as to under which heading and subheading it has to go is shown here. The next is our asset side of the balance sheet. So this is how we have to prepare our vertical form of balance sheet. So whenever a ledger balance or sometimes a trial balance is given, where we have to determine as to under which heading and subheading all the individual items has to be posted. There we will not be mentioning about the names of the ledgers. We will be simply posting the amount, but we have to know under which subheading that item has to be shown. And if there are any calculations, like I told you, P&L account credit balance has to be added with the reserves, P&L account debit balance has to be deducted with the reserves. This kind of workings, or sometimes when there are multiple items which appear under the same subheading, those items should be always put together or added together, and the total amount only should reflect in the balance sheet.